Hey, everybody, and welcome to another episode of Chart Request Live, the show where you pick the tickers and we chart them. My name is Jason Kretzky. I will be your host this afternoon, and we are super lucky today to be joined by our good friend, Mr. Ben Bennett. You guys know him on Twitter as Pattern Profits. Ben, how are you doing this afternoon, buddy? This is
Jason.
conversation number 2 we're about to have for the day.
Yeah, we spent some quality time together today. Very
Man,
nice.
there's nobody I'd like to spend quality time with more than you.
Great. We just took a break for Powell and then right back at it.
Yes, sir.
So,
Yes, sir. Well, we're so happy to have you on. I can't wait to get into the charts with you. Before we do that, though, I assume that most folks that are tuning in today probably are familiar with you and your work. But for everybody who isn't, could you take like a minute or two and just kind of tell us a little bit about yourself, your trading style, and those sorts of things?
sure. I started trading back in the late 90s, 98, 99, and we had a really good market back then, and it was pretty easy. And that was my introduction to the markets. And then quickly got a lesson, an expensive one, when the NASDAQ crashed in 2000. And that's when I decided maybe I better do some research, figure out what I'm doing. You can't just buy and make money. So I started studying the Can Slim approach, William O'Neill, Stan Weinstein. I started getting into the books and, trying to learn some type of system and process, and then took basically lessons from those and some others, and got fortunate to have a couple really good mentors, and then kind of just came up with my own style. And I would say it weighs heavily to the Can Slim style and growth stocks. A lot of those patterns that we look at, cup with handles, double bottoms, flat bases, 3 weeks tight, those are, all part of my routine, things that I'm looking for. But I just try to find some alternate entries, within the handles, within inside days. I use screening, as we'll probably discuss, to find tight consolidations where I can get in a little bit earlier than the crowd. And that's kind of been the way I've traded. It took me probably a good 6 years, I would say, to kind of get to where I'm at now, and been pretty consistent since then, but always trying to get more consistent with the drawdowns, especially in the tough markets like we've seen, where growth, that's kind of my universe. And when growth isn't participating, that's when I can, have a difficult time. So I do kind of combine, fundamental approach with my technical approach. So yeah, it does get tough sometimes when growth stocks aren't participating, because a lot of these commodities and things, it's a whole different pattern that they follow. So not always just focused on, earnings and revenues and just the chart patterns. I noticed that a lot of these breakouts in these commodities that normally would work in a, tech stock and growth, they don't work in commodities nearly as well. Yeah, you're better off buying weakness rather than strength. So I like, to follow that momentum in growth stocks. And so it's been tricky, but you never stop learning. And even though I've kind of found my way, I never stop learning. There's always more I can add, to my toolbox, and get better at those things that I've been using for the last 10 plus years.
Right on. Awesome. Well, I'm excited to see how you put those all those years of understanding and discovery to use here in this session. Before we get started, though, for everybody who is tuning in for the first time today, I just want to explain how we do this. We're going to go through as many tickers as we can get through in the next hour. You can vote for 3 tickers per round. One round is 1 ticker. So if we don't get to year 3, or I guess we can't get to year 3 in 1 round, but if we don't get to year 3 immediately, keep on voting for them. You do have to vote for 3 unique tickers. You cannot vote for the same ticker 3 times. But like I said, we're going to try and get through as many names as we can. So I'm going to turn it back over to Ben here. And we always like to start with the SPY. So let's talk about the SPY. What are you seeing? What are you looking for? How are you trading it?
So initially, coming back here to our low in February, 410.64. We got a little bounce. That was the low, rolled back over, then got another, nice move there in March. Growth stocks were participating a little bit. These clouds that you see, this is 1020 cloud, and this is 5065. We pushed through there and then rolled the back over. So this was very short-lived. And even though we did see growth stocks participate, a lot of the names like, NVDA and semiconductors and tech and, the Googles and the Apples and those were holding up very well. Then they started to get hit, rolled back over. You see that red line there, that's year-to-date anchored VWAP. This one here, it's kind of very close to the high. But that's on all my charts, red anchored VWAP. You'll see year-to-date anchored VWAP. Once we move below there, then we kind of got into that meltdown mode. I have this anchored VWAP, which it was kind of support a couple times, as you can see back here. And then it was resistance over here. So I've kept, that's an anchored VWAP from day one of 2021. So I've kind of kept that on my chart because still here and here, we saw it act as resistance. And then this last little leg lower came up into 1020 cloud there, and we really saw it roll over. Now, what I was kind of looking for here was the test here of this anchored VWAP from the COVID low. And at the time, 384.42 was the level I was looking for. We didn't quite get there before we bounced. We got as low as 385.15. And then at the same time, I was kind of, following the sentiment indicators. Put call ratio is one that I follow very closely. We were seeing some extremes, 1.3. Anything over like 1.1, 1.2 is kind of extreme in the put call ratio. We were getting some readings above 1.3. So I expected that test, and then we would bounce. We didn't quite get there, but then we did get the bounce. So now kind of climbing that wall of worry we talked about. I added an anchored VWAP here to the most recent low, and now just want to see that anchored VWAP obviously is going to be important as we climb to the upside. I want that to hold on any, pullbacks. Watching 1020 cloud there, that's now coming down into price. We got above the 10 portion of 1020 cloud. And now that 410.64 level may come into play next. That may be, kind of what we test next. If we can push through that 410.64, then you've got the 20 portion of 1020 cloud there. And, we'll kind of go from there. Volume a little light the last couple sessions, but that's always the case. I know we're always kind of looking for volume. If you look back over the last 15, 20 years, that volume always tends to pick up on the way down. And then it's kind of quiet as we first start climbing up. And then ideally, if we see a healthy rally, that volume will start to pick up later.
So how are you trading this right now? Are you trading it right now?
Yeah, I'm trading it. I've got a couple of stocks that were really good, strong relative strength names. I'll give you an example. Merck, which has been into new highs. Even when we were pushing into lows here, the last couple of days, it was into new highs, came out of a nice base. And stars, Constellation Brands, STZ. This is one that's just kind of starting to set up. And you want to take a look at that one?
Sure, yeah, throw it up.
So, and this kind of summarizes too, kind of how I like to get involved. You have this cup with handle pattern. Here's your handle. You're just now starting to peek through this little descending trend line. Now, most people will be, have their eyes on this 258 area as we come through that pivot above. I'm trying to get in tighter down here. Use those anchored VWAPs, use 1020 cloud, use that descending trend line, and try to get in a little early ahead of the crowd. So then, especially in this market lately, when the day of this breakout comes over here, I'll have some cushion there, maybe even be able to sell into it and avoid the drama like we see back here, where it tried to go. And then, we call this a squat, where it breaks through the pivot and then comes back in and then rolls over. So I'm trying, it's the same traditional patterns, but I'm trying to find alternative entries where I can still manage my risk. You see, I can still manage my risk very tightly here as that starts to turn up the right side. Now, ideally, this continues to climb and I can sell partials into the breakout. And then on the other hand, if this should roll over, the general market rolls over, I've got a really tight stop there and a quick exit if it does move against me.
And you're always using the 10-20 for the short-term moving averages and the 50-65 for the longer term. Is that right?
Correct. And yeah, that 10-20, that's the one that I'm really paying the most attention to when we're trending. I like to see, and you see that's been the case, unfortunately, on the way down recently, where even the bounces into that 10-20 cloud, then kind of reverse and roll over and we go lower. This kind of like a flag pattern and then to the downside, then flags again into 10-20 cloud to the downside. Now I may zoom in a little bit to a 30-minute or an hourly to zoom in a little bit more, when we're in this area. But for the most part, I mostly trade off the daily chart. Like I'm not really zooming in on my position trading. Now I'll do a little day trading, little futures trading, that type of stuff. And I'm zoomed in for that. But the main type of trading that I do is swing and position trading. Now I'm trained with position trading, which means 6, 9, 12, maybe even 18-month hold, which is where that 50-day, 50-65 comes in, because I'm trying to build that cushion. I'm trying to get enough cushion and get my cost basis above that 50-day moving average. That way I can switch over to the weekly chart and just kind of let it do its thing, let it wiggle. But I got to build that cushion first. So I usually do that through the daily chart. And 10-20 is the short-term moving average. Build some cushion using that 10-20. Don't get stopped out. Then once I have cushion, maybe 10, 15%, or depending on the market, then I can switch over to the 50-65 and just kind of work from there and let it do its thing.
Gotcha. And last question for you before we move on to the individual names here. What's your gut instinct on SPY? How does this play out over the coming weeks and months?
Yeah, I think we have more upside just because sentiment got so poor. And I still saw today we got what IBD refers to a follow-through day. I believe we did. I haven't seen the final numbers on volume, but price was enough. We do not have a lot of growth stocks breaking out, so that's what needs to come next. But I do think that sentiment got poor enough that we can get up here into this anchored VWAP area or off of the high, kind of just like we saw back here. I would not be surprised if we get this type of run. Now, we may not push through 50-65 cloud like we did back here, but because we have a lot more resistance in this. You look at, back here, we really only had one VWAP and a year to date and to push through the cloud. You've got multiple levels, big volume shelf here, point of controls right there where year to date is. So I think it would be wise if you got down in this area and we do get into this area. That's where I'd definitely be trimming some profits if I didn't already take some, on the way up. And the way I like to do it is, when we have a day like today, trim a little, we pull back a little bit in a couple of days, add a little more on, but maintain those core positions and kind of trade around that core.
It'd be interesting to see if it's able to slowly grind higher. It's been it's been so hard to go long in this market, just generally speaking, right? Like every time we've seen a small pop, you've been forced to sell into it. It would be interesting if now, when sentiment is so bad, that they start reversing that way of trading and then just keep on slowly grinding it higher,
And
almost to
this is why
punish the people
I
who
have
got long.
rules, because I did not want to buy anything today, but on a follow through day, one of the rules is you've got to buy something.
Right.
You gotta get involved.
Right.
So yes, sentiment, like everything is saying, don't get involved, don't get involved. That's usually means I should get involved.
Right. Right. Exactly. All right. Well, with that, let's move on. Let's get into these individual names. The first one that we've got is NVIDIA, NVDA.
I love this stock. It's one that I've traded for years and years and years. It's one that has treated me well in the past. and it did shake me right here. I got in on this move coming through that pivot 269.25, and I did take a little bit off, but thought we would come back and retest and bounce here.
Mm-hmm.
And then we rolled over and I ended up getting stopped out. But a name that I am very familiar with. I love trading it. I really wish it would have performed as well today as AMD did. There's always kind of this battle in my mind between NVIDIA and AMD. If we look at AMD, had a huge day today. So NVIDIA now into that 1020 cloud area. And that's where you've got to kind of see, does it pause here? Ideally, you see it pause here, maybe move sideways for a day or two, give us an inside day, and then push out. That's what I'd be looking for here. You see, I have this descending trend line, that red descending trend line there. I also have a couple of levels from further back. Yeah, just a few levels from further back here too. There were support back here. So that descending trend line, and this looks like about 206, that level may act as support if you do, resistance if you do push through that 1020 cloud there. But now this is the spot you really want to pay attention to. How does it act over the next few sessions? If we see it roll right back over again, like we saw back here, and in general, if it does that, you're probably going to see most of the cues, the NASDAQ, Apple, Google, Facebook, all of those are probably going to be rolling over along with it. Another thing you may want to keep an eye on is semis in general, SMH, SOXX, see how the whole group is acting. And then, of course, keep an eye on AMD too, because a lot of times one of the two of these will be leading, with each rally.
Right.
AMD a little bit ahead of this one. But, if we can, again, if we can get up here to where I have this kind of volume shelf point of control up here, 50.65, that would be if we could push through that trend line, get back into this area, makes the most sense to me if we see a continued rally.
So a lot of traders like the 821 MAs. What's the story with the 1020? Why do you use those?
I started with that in the beginning of my career because, and that's kind of what they use in Can Slim and William O'Neill. It's actually the 10 MA and the 21 EMA, but I just found comfort with having 1020. And once I switched to clouds, and let's thank Ripster for this because the clouds were fantastic. I never liked using just a line, like just the 10 MA, because there always seemed to be like, okay, it crossed it midday. Do I get out? Do I, exit right here? So then I made a rule to where I exit only at end of day. But then as you develop more as a trader, you kind of realize that these lines shouldn't be so specific. They're areas to look for support and resistance. So what I'll kind of do is wait for some kind of, whether it's a reversal against me or some inside day here, or maybe a bearish outside day here. Something needs to tell me that price is reversing, or a bad, ugly close, something like that, rather than just saying, oh, it tagged the 10-day and it's rolling over at noon, I'm going to exit here. There's just so much more to it than that. So the 1020 cloud is something that I've used, from the beginning. I was comfortable with it, but I understand the traders that want to use the EMA because they want something. The 8 EMA moves a little faster, and it's, the more recent activity is what's incorporated in there. So if you're a real short-term swing trader, you're probably going to want something that moves a little faster than 1020, which might be a little bit too slow.
Right. All right. So last question before we move on. Generally speaking, it seems like you're anticipating continuation higher. What negates that anticipation for you? What do you need to see?
Well, I'll tell you, see what we saw right here, this inside day. And I watched those very carefully because an inside day tells me there's balance. So that inside day, you have higher low, lower high. We saw that come out to the upside. So now, let's say we get another inside day, or maybe we get another candle higher, and then we get an inside consolidation. and then that comes out to the downside and volume picks up, those would be the type of things that would change my mind rather
Okay.
quickly. In the old days, I used to let that play out a little bit more, but in this market, you have to have a quick trigger, because
Yeah.
you see back here how quickly this melted down
Mm-hmm.
from new highs here, new relative highs here, how quick they'll move against you. So I've become a lot more involved in watching price and letting price guide me, but using those indicators to tell me, hey, this is an area that I need to be focused on and kind of on guard for that price reversal to happen. So if we got an inside day here and then went bearish outside, or that inside day went, to the two down to the downside and volume picks up again, I'd be ready to get out.
Okay.
And that goes
Cool.
for pretty much everything that I'm holding. Right now in this market, anything that moves against me quickly, and I'm raising those stops. Like for example, if I had NVIDIA on this inside day, I'd be getting in over the high, 177.88. So once I get this move, I'm probably moving up my stop to today's low.
Yeah.
Like I'm not taking any chances of it moving against me.
Got it. Understood. Okay, cool. Let's move on. The next round is KHC. It's a name. This is the first time I think this
Yeah,
name
these
has shown up.
defensive names, they're working. Today they got hit a little bit because we saw tech participate, growth participate a little bit, but these names have been working. You see how kind of following 1020 cloud on the way up, acting as support, close just below there today, but this kind of consolidating. And I see this kind of consolidating, maybe a little bit of an ascending triangle forming there. And you kind of look to see how this might play out. Does that bounce in there a little bit more and then come out of that pattern? It looks like it tried to go here and came back in, and just kind of consolidating. Nothing scares me off here, as far as volume goes. But I'd want to see this push into new highs really quickly, and hold that 1020 cloud. A little close below like this, some people use like a 1% rule or something like that. If I was in this, wouldn't necessarily shake me out. But if this trend line breaks, I always assume that my risk at that point is to here, to the 50.65. And I'm not one in this market, especially, that's going to want to see that break and try to hold, into here. I'd rather let it break, get out, and then wait for it to set up again and keep that risk tight, and try to capture that breakout into new highs.
So this name has a tendency to be a really slow mover, right?
It's supposed to, but a lot, look back here, like you
Right. True.
get some moves in these defensive stocks lately, just because, especially back here, there wasn't much else acting well. You were
Right.
seeing the Pepsis and Coke and Hormel and, all these names, that Kellogg's, General Mills, all these staples names that we're not used to seeing act this well and move. I mean, yeah, it's not a huge run like if you compare it to a tech stock, but for Kraft Heinz to go from 37 to 44, in just a few weeks, that's a pretty significant move, especially when it was just 32, 33
Right.
the month before. So, be working, and as long as it keeps working, they're moving into new highs. Good. But I would also, if we see what we've talked about with the S&P and the Qs, and we start to get some participation from the growth groups, I expect money will flow out of these.
Yeah, for sure.
Because people just aren't going to be continuing to pile into the defensive names if we start to get some participation, from those growth groups and tech and the stuff that we're used to seeing, look like this and have these type of runs. But at the same time, if we roll back over and the market stays defensive, for a while there, we saw money flow into Apple, where that was kind of like where everybody was putting money as protection. And now it's flowing more into the defensive names and staples.
I notice you've stayed on the daily chart pretty much this whole time. Are you ever using bigger time frames, weekly, monthly?
I do. I use the weekly, and it's something that with this market, this particular market, I've shortened everything up so much
Got
because
it.
I'm really not zooming out. That's not really where my time frame is right now. Now,
Okay.
in the big picture, absolutely though. Like if we're in a healthy market, in a bull rally and stocks are participating, growth stocks, yeah, I'm zoomed out to the weekly. And in fact, I'm zoomed out to the weekly as soon as possible
Yeah, right.
because I want to block that daily noise as soon as I can.
Got it. Okay. That makes sense. Cool. All right, let's keep on moving here. Next round is Facebook.
Facebook. You know, after earnings there, um, I have some fibs up here. Let me get rid of those. Um, and you see, I've kind of, in many of these actually, going back, trying to figure out different patterns there. We had this going back, this gap down, that anchored VWAP attached. Now, a lot of times I'll use anchored VWAP as a guide. When you have a bit, whether it's a big gap down or a big move up, I like attaching that anchored VWAP to tell me who's in control. So anchored VWAP coming down, price coming down. I know sellers are still in control. When we got over here, you kind of had this double bottom pivot. 213.15 was a level I was watching, and then I was waiting for it to reclaim that VWAP from the gap. And then it did. It pushed through right here. I think I day traded this just a couple days, and then the general market started rolling back over. So now you've got this as the most recent earnings gap, and this time to the upside. And you see that you're kind of right there at that anchored VWAP, trying to push through there. So you get back through there. And especially as this starts to turn back up, that tells me buyers are back in control from here. So I'm constantly looking for that. After the earnings gap here, you had about 4 or 5 days where buyers were in control. Then the general market was just too weak and it rolled back over. This anchored VWAP on those gaps will keep you out of trouble. If you're above that and it's rising, buyers in control. You're below that and it's falling, declining, sellers in control. We can thank Brian Shannon for teaching us that and how to use it. But now, so what I would be looking for here, you want to reclaim that anchored VWAP, then reclaim that anchored VWAP from off that prior one. Then everybody from this spot, the buyers are back in control as long as you're above there. And then you've got 10-20 cloud, 50-65 cloud that you could push through as well. So, and then I would take this, I would move this up. Now you're talking about, what's that level? 236.86. So now you've got a much bigger double bottom pattern, and I would change that to 236.86, because before we were just looking at this little pattern. Now you've got a much bigger potential double bottom here. Here's the left side, here's your right side, and then you've got to turn that corner there and get through that double bottom pivot. Then you get into this window and you see how volume, you have volume here and you have volume up here. If price can get into this window, a lot of times acts as a vacuum. And that's always a good thing, to get into that, that between the volume shelves there, sometimes acts as a vacuum. But Facebook, another one that we're going to need to see tech participating. You're going to want to see the general market cooperating.
Right. Where are you anchoring the volume by price from?
So I'm back at the COVID lows.
Oh, okay. Got it.
So, or now it's kind of pushed forward a little bit, but I've been trying to keep it back there by the COVID lows. Now, let's say I was really wanting to get in here and was really considering taking an entry back above this anchored VWAP. I would bring that all the way over to where it starts, or maybe the day before that initial gap. Now that gives me a much better idea of where the majority of volume is right now. And that's kind of right where we're trading right now. So big picture, I want to zoom out as much as I can. But if I was really, focused on, okay, I'm going to get an entry here above this anchored VWAP, I would bring that volume by price closer and really just zoom in on the most recent action.
So one last question before we move on. You've been in the markets a long time. You've seen tech darlings and just generally market darlings kind of rise and fall from grace, right? Facebook with that big gap down, 325 to 240, 250, trading as low as 190, 180, even into, 165 even just a couple weeks ago. This is a fundamental break in the chart, right? This is a broken chart. How common is it for this level of damage to get repaired in what a couple of months? Like, I think probably a lot of traders are maybe holding from pre-gap down, right? Hoping that prices come back into that gap and fill. In your experience, and what would you anticipate? Do you think price finds its way back into and fills that gap in any sort of near term, or is this long-term damage done and don't have that expectation?
Yeah, I don't have, this is not something I would get involved in. I don't have that expectation. A lot of these can take 5 to 10 years to reclaim any of their former glory. So it's not a name that I would want to get involved in maybe than anything other than a quick trade. And like, there's so much damage here. Like for me, structurally, I would have to see this probably back in this gap to even think about it, to even consider, getting involved. To me, something like this is broken. It's in a downtrend. It's damaged goods. Give me the stuff that's up near the highs or close to new highs or has the potential for new highs. Every cycle, every market rally, we see a new set of leaders emerge. And you really want to try your best to get away from those old leaders and try to expose yourself to some of the newer names, newer products, because I know Facebook is trying to reinvent itself with Meta, but the odds on the stock are still stacked against it. It really is. And it is a long drawn out process, you have sellers at multiples of every like $30 all the way up that are just waiting to break even to sell to you. So I try to avoid these broken stocks and broken charts.
Okay, right on. That's what I was curious about. All right, let's keep moving then. We're going to go to UGA, the United States Gasoline Fund. This is a new name too. Oh, nice.
Boy,
new highs.
Nice. Looks a lot like oil, but oil hasn't taken out the high. Gasoline has. So you're pushing into new highs there. You had this little, and this kind of looks like crude before it's broken out. You got this kind of little triangle here. And then once you came through that triangle, off you went. Little kind of shakeout here at prior highs. And that's so often the case. I try to discuss that with others. Be aware of where that prior high is, because a lot of times you'll tag that, get a little shakeout or a handle, because the people who bought over here, they're anxious to get out over here. But you see they get out and within a couple of days, boom, you're right back into new highs. So let them shake out, watch volume. You see that really dry up in volume there on day 2 of the decline as it came back into 1020 cloud, and then boom, right through those highs. And pretty much anything trading, at new highs, you're in good shape.
Yeah,
that's where you want to be. And there's nothing there as far as, overhead supply going back. So this is the position you want to be in, is ideally coming through like a trend line break, or even if you got it here as it came out through there and into new highs, you can use like I would prefer to use 1020 cloud, kind of trail it. Ideally, if my cost basis, let's say I bought back here as it came out of this triangle, and now my cost basis is starting to get below that 50-65 cloud, that's when I like to zoom out to the weekly, especially if I've got this kind of cushion in something, where I'm up 15, 20, 25%. And that way I can just kind of let it wiggle and do its thing and zoom into the weekly charts. And that's how you really get those big gains. Because a lot of times these daily charts, it's tough. They'll shake you out pretty easily. The quicker you can get to the weekly chart, the less chance there is of getting shaken out.
Yeah. How do you define your targets for buying into all-time highs?
So 15 to 20% from wherever that high is the guide that most can slim traders use. We're
Okay.
usually looking for 20% because we're usually cutting losses at 5 to 7%. So we're trying to keep our risk reward at 3 to 1. So 15 to 20%. Now, if it's something, and especially if we're in the beginning of a bull market, which we certainly could be for commodities, that's something that I'm going to keep in the back of my mind to maybe try for a bigger win rather than just cutting it off at 15, 20%. On the other hand, going back to 2021, late 2020, kind of had that feeling we were like getting in the late innings there and things were really ramping. I was tending to try to take those profits a little sooner. I wasn't really trying to grab like for example, off of the COVID lows, grabbed Peloton in the 30s and rode it to 140. That's because we were at the very beginning of a new bull market, for those work from home, stay at home type names.
Right.
I think we may be in the very early innings for commodities too. So if you were thinking along those lines, that's where I would probably take off anywhere from a third to half, and then try to, capture that second half of that position to a larger gain. And maybe I'm adding and trading around that core as well, on the way up.
Are you usually buying or are you usually trading options or common?
So common.
Yeah.
In fact, almost exclusively common,
Okay.
except lately I've been a little bit more of my degenerate self and back into futures, but just no options, no, just common. When I started, I worked, in fact, a lot of my learning was through options in the beginning, and actually built some of my bankroll in the beginning through options. But as time's gone on, I've come to just take the time equation and the theta burn and all of the strike price, take that all out of the equation. Now I just need to worry about the price of the common and how it's
Got it.
acting.
Yeah, that makes sense. All right, let's keep on moving here. We've
Uh-huh.
got a new name, IPI, Intrepid Potash. I think this is a
This
new
is
name
another
to.
one I know, and fertilizer group, another group, as a whole, that group had been acting really well. MOS, CF, the leader, NTR, there were quite a few. Then we started to break down a little bit. And now I think the big question is, are we forming a right shoulder here? Because you
Right.
start to see this kind of left shoulder, head here, starting to see the right shoulder form here. Now I'll follow price and I'll see how it acts. But if we did start to see, that right shoulder form there and you start to get a breakdown through this neckline, you want to be aware of that. However, when I look at the group as a whole, and again, going back to that potentially early in the commodity cycle bull market, I still think there's a chance that this can just keep climbing up the right side here. And you'll turn this potential head and shoulders into a cup with handle or some other pattern over here, depending on how it acts. So what you really want to watch, how does it act if it gets up into this area? If it has symmetry with this area, you get here into the volume shelf point of control over there. Those anchored VWAPs, I'd throw another anchored VWAP here off of the high. And how does it act over here?
Right.
If it gets in this area, starts rolling back over, good chance that maybe we are going to form a right shoulder. On the other hand, you push back through there, come back and retest, turn those anchored VWAPs back to the upside. And then all of a sudden you see 10, 20, 50, 65 cloud acting as support rather than resistance, there's a good chance you may come up the right side. And I'm going to zoom out quickly to the weekly just because these are early stage to me. So, and what I say by early stage is like, this is really a stage one base here that you just broke out of and had this nice move. Normally you'll get 2, 3, 4 bases like that before you're actually, at a top that you really need to worry about, protecting yourself. Given that this base, if it does form, would only be stage 2, I'm more leaning towards this coming up the right side and forming another base and then kind of breaking out, or rather than rolling back over. But at the same time, it's okay to have an opinion like that, but you got to react to price. Like you can't be, stubborn about it. Let the chart and price action guide you. Even if you have, an opinion, it'll tell you if you're wrong.
Right. Awesome. Let's keep on moving here. Next round, PayPal.
PayPal. Not my favorite.
Looks
and the thing is, I love the product. Another one that had the gap down, new lows, 1020 cloud resistance, 5065 resistance, 1020 resistance here. Just a typical downtrend.
Yep.
And not one that I'd want to be involved in. You do see I have that anchored VWAP there off of the gap. You've got year-to-date anchored VWAP. For me to even entertain thinking about getting involved, it would have so much work to do up the right side to even tell me that it's, trying to get healthy, maybe through one of these pivots, but I don't see that happen. And this is just melting lower, ugly chart, and one of the ones that I'd, recommend staying away from if possible.
Yeah, I agree with you on that for sure. Let's keep on moving. Next round. Oh, this is Realty Income Corporation.
I get this one every once in a while in the spaces too. It's not one that
that's pretty
I follow,
choppy,
but a lot of people do. Let me move this out a little bit here. And then, so the first impression I get is like a broadening formation hits me right away. So kind of like, it's not perfectly clean, but you do kind of see that there is some, when you see broadening formations like this, there's some emotions going on in this stock, some emotional investors, some people really digging in their heels with it and aggressively buying the bottom. And then you see the big bounce and then aggressively selling the top and you see it roll over. You're right in the middle of that now. So, if it continues higher, you wait for it to move against you. If you're back above that volume shelf point of control, back above the clouds, back above year-to-date anchored VWAP, maybe want to be aware of where that anchored VWAP sits off of the high and can use that as kind of a guide. And then same thing from off of the low, just kind of give you some guides as to who's in control where. So this one, if it does continue to push higher, maybe it's making a run back towards that ascending trend line of that broadening formation. Let me just quickly zoom out to the weekly. Yeah, you could see it's kind of an emotional, it's had emotional price action before. So even in that context, and look at how when you zoom out to this, you can see that even over a longer term, you've got that same type of broadening formation there, over the longer term. So yeah, this one that maybe you are better off, they say, don't buy new lows, but that's working in this one, just because of and all stocks have character. And that seems to be the character, at least right now, of this stock.
Yeah. Seems like the best move on this would be like some sort of spread selling premium on either side, because this chop is pretty intense.
It is. It's really intense, and there's not a lot of stuff. Most of the stuff that we've seen lately is either the defensive or the energy stuff that's trading near highs, or it's the tech growth stuff that's trading near lows. I
Yeah.
haven't seen a whole lot of these, this clean
Right.
in this market. So yeah,
Right.
interesting. I'm betting there's probably a dividend playing a role in here too that I'm not aware of. That would be my guess.
I'd be curious what Sarah Strat Sniper's opinion on this would be, because it looks like it's probably getting pretty close to her 50% rule from near-term highs to near-term lows. Do you ever
Right.
use fibs on? Do you ever use fibs at all?
I use fibs a little differently, not on something big like this, but what I would do is say, to measure that 50%, like where is that 50% move? Whoops. Where does that lie, So,
Right, we're getting right there.
like you said, you're right there.
Yep.
And I'll sometimes, and I don't use it nearly as much with individual stocks as I do with the major averages. Like we were talking about with SPY, had that, dump over the last few months. I may take the high and the low there and kind of line that up. Where's the 50% there? And maybe even go back to the COVID low to the high, zoomed out on a weekly or monthly chart. And again, just to have an idea of where that 50% is if we do start, getting some upside momentum.
Got it. Okay, cool. Just curious. Let's keep moving. Going to go to Netflix here.
So this is another one of those gapping on the way down. You had the gap back here, another one that's broken, trading below anchored VWAP, below, well, you're kind of right into 1020 cloud. These big gaps on big volume like this, though, they tell you that, the stock is broken. When a stock gaps down, what was this, 350? When a stock gaps down to from $100, basically from 350 to 250, and it does so on this kind of volume for multiple days, those big institutions, investors are just saying, get me out. I don't care about the price. Just, I want out of this stock. You don't really want to, be involved in that. It takes a long, even when you do start to see it climb up the right side, it takes such a long time to recover. And you have so much resistance here. Even if you were to get in this gap, then you've got another area of resistance. And this is why these type of stocks take 5, 10, 15 years to get back, into even partial recoveries towards our old highs, compared to the stuff that's already holding up well, showing relative strength and near new highs.
Right. All right, let's keep on moving here. Next round. MAS, Masco Corporation.
Masco looks like it's putting in a little bit of a inverse head and shoulders here. I can kind of see that starting to shape up. We have to, not real clean there. So let's do this. Maybe starting to form up there. I do see some big volume green bars. We like to see that. As this comes, you're back above 10, 20, 50, 65 cloud. Next, you want to see a push above that year-to-date anchored VWAP. I'm going to zoom out. Let's see where anchored VWAP sits off of the high. Pretty much the same spot there. So you kind of want to see that push through there. This is a common bottoming pattern, the inverse head and shoulders. It's a reversal pattern. And we look for volume exactly like you see here, where it's coming up the right side, gaining a little bit of momentum there. We like to see that volume ease up as it pulls back. So yeah, I'd just be looking for that to push up and through there, ideally on big volume. Let me just zoom out quickly to kind of see where we're at. Yeah, so, and again, Sarah, I'm going to make Sarah proud. you got broadening formations everywhere I look. I starting to sound like Rob Smith.
You're starting to sound like a stratter.
Rob and Sarah. But just something to be aware of. And again, this is on a weekly chart. So you're not really going to, trade. Personally, I'm not going to trade off of those levels, but something, to be aware of in the big picture, that may line up with one of these lows as you start to see it come up the right side.
Gotcha. Okay, awesome. Let's keep moving. Next round is Tesla.
We all, I think, well, most of us are cheering for Tesla. We want to see this stock, especially the growth stock guys like me. Let me just make sure my volume by price is, go back a little bit more. We want to see Tesla participate because it is an important indicator for us in the growth world and the growth complex. We want to see, I have an inside day here, and I want to see that inside day come out to the upside. So that would be over 764.24. When I zoom out, the main thing I see here is kind of this big double bottom pattern. Left side here, right at 700. We shook out below that here. And now what ideally happens is we start to climb up the right side here. And, that would be initiated with a move out of this little consolidation and inside day here to the upside. Did see good volume there on that shakeout, closed well. I was kind of hoping it would participate a little bit more today than it did, especially on a day when the Nasdaq's up as big as it is. But I think there's some overhang right now with the Twitter drama. Definitely. And it may be a little bit of a laggard until that we get some clarity on that and that's resolved. But what I look for here is for this 700 level to hold and this to start climbing up the right side. That's what I want to see. Again, have this earnings gap back here. So I've got anchored VWAP from there and the highs. So if we do start to climb the right side there, let me see if this one's even in play anymore. Yeah, this one not really as important as those more recent ones off the gap and off those highs. I'd love to see it get to this area in the most, like we talked about earlier, if we get a rally, I'd love to see it get back towards that 900 level. And
then to the downside, what negates your bullishness would be just trading below 700.
Yeah, you take out that low again and roll over here. Even short term, I wouldn't want to see it confirm even this little consolidation to the downside, especially if the rest of the market's holding up well. Yeah, and all of a sudden Tesla's rolling back over. Yeah, not a good sign.
Do you have any thoughts on targets lower?
So
like if 700 breaks?
Yep, I have another level here, 546, and that's been support a couple times back here. So we'll say 550. Okay. But in that general area, 550 to 560 in that general area is the area I'd be looking if it does break to the downside.
Okay, cool.
But fingers crossed that doesn't happen. At least not yet. Let's get a rally first.
Got to rally first. All right. Let's keep moving here. Space, SPCE.
Oh, haven't looked at this one in a while.
Yeah, me neither. Ooh.
Virgin. Oh, I see why.
Yeah, exactly.
Another one in a downtrend. Moving now into 1020 cloud. That's kind of that area that we talked about. You have this gap down here. Let me zoom out and kind of blow this up a little bit. And the last few sessions, just from this little gap here, buyers getting back in control. Got to see though, can they take out the lows here, which is where you're finding resistance right now? Then you're probably going to find resistance, into that gap. So it definitely still has work to do here. You see a lot of volume sitting right here as well. Take a quick zoom out to the weekly. Yeah, this
thing is ugly. A dog.
Yeah, ugly downtrend. Not something I'd be looking to get involved with. Even something like this, like I can see what it's trying to do here, but not something I would want to get involved in.
Yeah. Totally understandable. Right there with you on that. All right, let's see. HOFV, Hall of Fame Resort and Entertainment. Ooh,
Yeah, another one not
another
so
ugly one.
hot.
Ooh, it is
Downtrend,
77 cents. I
below
think I remember when this thing
everything.
was trading like $12. Wasn't there a time when it was trading like $12?
Yeah,
No,
you've
$8
got
bucks.
yeah. Oh, it's
Yeah,
relatively newer.
it is.
So what I like to do with these is go to day one and put on that anchored VWAP.
Yep.
And then you can see, yeah, just
Jeez.
ugly.
People are trapped.
Yeah, when it couldn't go back here and couldn't set up and then rolled over here. Yeah, just a complete meltdown there.
Yep. Ugly, ugly. If you're
Sellers
long this
definitely,
name,
sellers in control.
yeah, if you're long this name, consider just taking the L and moving on. All right, next one. DBA. I have a feeling this one's gonna look pretty good.
DBA,
Mm-hmm.
agriculture. Yeah, that's a good one. You see how this is just followed that 1020 cloud acting as support, all the dips, little flags into it, and then bounces. Year
Yep.
to date anchored VWAP there. I mean, that's what you like to see in these in the bigger picture.
Right.
I'll tend to use on my weekly charts 1013 is my cloud on the weekly, which
Okay.
is basically the same as 5065, but on the weekly chart. And yeah, moving into new highs, we like that. Now this goes back to what we talked about earlier with IPI setting up that, is it a head and shoulders or is it going to do something like DBA just did
Right.
and look like it's giving you a right shoulder here and then rip to the upside?
Right.
So that's why it's usually a good idea to keep an eye on the group or an ETF or a sector ETF, something like that to help guide you. You know, when you're just focused on IPI, sometimes you might not see that bigger picture on what's going on with those other stocks.
Right. Cool. Okay. Let's keep on keeping on here. IRM.
I go way back with this one. Iron Mountain, they do paper shredding.
Yep. I see
Um,
the trucks cruising around town from time to time.
Yep. And God, it seems like they've been around forever. Well, you can see that I had this little cup and handle. 52.22, the pivot came through there, pushed out into new highs, got to about, what was that, 58, almost 58, pulled back in with the market and, you know, trying to hold that 50-65 cloud and make the turn here back above that pivot. Definitely pretty good shakeout here. So I'm not sure if that was earnings or some news might have been, and shook them out there. And but now, you know, reclaiming, this is the type of name that, you know, again, defensive and may kind of work in this market when money's flowing into those defensive names.
Yeah. Okay. What gets you bearish on this?
If we roll over back below 50-65 cloud and back below that pivot,
Yeah.
I'm going to assume that pivot's going to fail and down we're going to go.
Okay.
You do have that one more level year to date anchored VWAP there, but I would not hold out for that. Like I
Right.
really want to see, you know, 50-65 cloud right there and that pivot right there. I'd want to see that hold.
Got it. Okay. We are coming up right into an hour here. So let's just do one more. And it's going to be DKNG. I've been seeing a lot of people talking about this.
Man, I
over the
love the
past week or
product,
so.
but the stock is awful.
It looks terrible.
Yeah, it does not look good. I mean, I like that it bounced here, but again, big volume, you know, on the way down on those gaps. This gap back here in play. You got another gap here. Yeah, I mean, you're still in a downtrend. It has so much work to do. And it's a shame too, because I don't know if you've ever used their product. It's awesome. I love the product, both for fantasy and betting, you name it. And I was excited when they came to market. And that's why you really have to separate the product, the company, and the stock, because the stock is just awful.
Yep.
Yeah, continued downtrend. Maybe you're going to get a bounce here, 50, 65, but just a lot of work to do to come up to the right side. And you have a lot of sellers. Like you'll see it even better if I zoom out to the weekly. You got all these sellers waiting for break even on the way
Yep.
up.
Right.
So it's gonna be a while.
It's going to be a while. Right on, Ben. Well, this has been awesome, man. I cannot thank you enough for taking time out of your busy day to spend with us. I know that everybody watching is appreciative too. If you are tuned in and you don't already have a TrendSpider account with us, please take advantage of Ben's coupon. We've got 25% off all accounts if you're a new subscriber. So if you've been sitting on the sidelines, now is the time. There's no better time than the present to get yourself the proper tools if you're trying to trade these crazy markets. Again, Ben, thank you for being here. We do really appreciate it. Where can people find you online?
Thank you, Jason. I'm on Twitter, Pattern Profits, and my blog, patternprofits.net. You can find me there as well. I share some scans and stuff there, and that kind of where I build my watch list of the stocks that I'm actually getting involved in.
Awesome. And Ben is a fantastic follow, always posting great content. So please do give him a follow. And yeah, we appreciate very much everybody tuning in today. We hope that you guys found this all very helpful. The next event I've got going on, we've got a Twitter Spaces tomorrow night, 8 p.m. Eastern. We're going to be talking trading setups with Bones Trades, Jeremy Newsom, One Life Trades, and Juicy Trades. So if you are interested, join us tomorrow night, 8 p.m. Eastern on Twitter Spaces. Everybody's going to be bringing their favorite setups into the end of the week. So that should be awesome. So again, thank you guys all for being here with us this afternoon. Ben, thank you so much for being here with us this afternoon. I really look forward to doing this with you again soon. And I hope you guys all have a great rest of your week. Profitable trading, as our friends at All Star Charts say, YOLO responsibly. And we will catch you next time. All right. Have a good night.
Thanks, Jason.
All right, brother. Thank you.